A number of people I've spoken to, when I talk to them, ask me, what exactly do they do? Now, here's your opportunity. Maybe there's a fund manager out there listening and thinking, should I be getting into this guy, should I be not? Who is RGT Smart?
Okay, RGT Smart is the joining of two companies, two well-established companies. RGT, I think we should talk about first. It's the older company. It's been going for 30 years. It's probably best known for its work in association with NAMSA, producing the vehicle automotive statistics for the South African market. Very, very strong.
So when those
IT
numbers
platform.
go wrong, it's you guys who have done the tallies wrong.
Yes, but we don't go wrong.
I haven't seen a correction yet, just in case, so we know who
but,
to.
yeah, I thought for a minute you were going to perhaps blame us for when the market doesn't do so well. But the motor trade is doing well, coming back very strongly, and that's obviously good for us as well. And then KA Smart is a management consultancy, a specialist in business intelligence and marketing consulting, customer service management for clients. And it's one of those situations where the two companies added together forms much greater than the sum of the parts. And it was a logical move to put the companies together.
Yeah.
And the next step for us is to take it to the market because this is only the beginning for us. You know, many people look at it, they say, "Oh, you've done a listing. Well done, congratulations, you've arrived." Well, we have arrived, yes, but we've arrived in the starting blocks, is how we like to look at it, and we're going from here for much more growth.
Absolutely. Now, you say RGT is the older of the two companies,
yes.
KA Smart is the younger one, but KA Smart is actually the one with the bigger revenue base, 60% of the revenues.
No, not at all, not at all.
It's the other way around.
It's the other way around. 60% of the revenue comes from the RGT business at the moment, but KA Smart being younger is growing at a faster rate.
Okay.
We tend not to split the two companies because of the way that it's growing, and we do many projects that are in fact shared across the companies, where the revenue might come in at the group level and in fact be distributed to the two operating divisions.
Now, just give us a breakdown of KA Smart, because I see here you say you do quality checks and quality service systems. You've developed quality service systems for companies such as Audi, Citroen, Cadillac, you name the big motor brands. What
yes.
exactly do you do there?
That particular product is called our service quality system. We do it for the motor body repair or panel beating industry. We also do it for a number of motor dealers, where we do service quality follow-up. So this is not your typical service quality follow-up with those calls where people call you. We actually handle the entire process of the customer complaint, if there is a complaint, to the customer's resolution and his ultimate satisfaction.
Okay. And in terms of growth, maybe even before we go to the growth, let's talk about competition. Do you have any competition here in South Africa?
You know, we have a wide range of products and services, and in some areas we have absolutely no competition because of our very strongly established base. For example, our association with NAMSA is an exclusive one, and a long-standing one, and we hope it will endure for many, many more years. In the systems development field, we have competition. Obviously, there are many companies that do systems development, but we believe we do something unique there. In the service quality monitoring, yes, again, we have competition, but again, we believe our product and our offering is unique.
Okay, so very strong in South Africa. Are you looking beyond the borders of South Africa?
We have already launched an initiative into Africa, and that is going very well, a very strong initiative. Yes, into the future, we're looking at taking our technology and our unique IP into global markets.
And you're talking about going outside Africa as well.
Yes.
Which parts of the world will be targeted?
Well, you know, our strength has always been motor trade related, motor industry related, and probably the fastest growing area for motor trade is the Asia Pacific region.
Indeed.
We've got to look at India, China, Malaysia, and so on. So those would be target focus areas.
So the market took up your issue at 10 cents a share. Is that a fair valuation, do you think?
We think we're cheap at that price. We think we're undervalued. Of course, we would say that.
Sure. To be expected.
But we also realize that the market this is a tough time for the market. The market's been through a difficult time, and we saw no point in going in at a perhaps a value that might have been seen as expensive. We wanted to go in at a fair value, be fully subscribed, and grow off that base. And that was why we went in at 10 cents.
And I suppose also one of the reasons for coming to the market is that you see greater growth opportunities. So in terms of growth going forward, what are you looking at? Double digit in terms of revenues?
Look, we've as published in our prospectus, and we are looking at strong growth, 25 to 30% over the next 2 years. But more significantly over the perhaps next 5 years, we would be looking for much, much stronger growth than that. We've got very ambitious plans, which obviously will include some acquisitions, because to get the level of growth we're looking for, acquisitions must be part of the game plan.